Hello, everyone. Welcome. We'll get started shortly. Welcome, everyone. Welcome.
Hi, David.
Hey, guys. Welcome, Joe. Welcome. Welcome, guys. We'll get started shortly. Welcome, everyone. Welcome, guys. We'll get started shortly. Hello, everyone. This evening is Q&A. We'll get started shortly. Welcome, everyone. Welcome. We'll get started shortly. We'll get started shortly. All right, welcome everyone. Welcome, guys. Let's go ahead. I'm going to share my screen. As you guys know, on Mondays we do Q&A. All right, so Q&A. Hey, Dean, welcome. Hey, Bill, welcome. Ranjit, welcome. Hey, Deborah, welcome. Hey, Joe, welcome. Welcome, guys. All right. All right. So, Deborah, you're here in Orlando, huh? So I'm here in Orlando also. Welcome. Welcome. All right, guys. As you guys know, on Mondays we do Q&A. Hey, Solomon, welcome. Anything on your minds? Anything you guys want to discuss? Whether it's the markets, any trades that you're in, the systems, anything in general. Any questions of the bat? Any questions on anything? All right. No questions yet. All right. Interrupt me. This is your time, right, to ask any questions. So this is for you guys. All right. All right. Hey, Miranda, welcome. Hey, Stella, welcome, Stella, welcome. I'm gonna go through the markets, and again, interrupt me if you guys have any questions. Okay. All right. So again, Monday's Q&A. All right. The market was down today. All right. I did get some messages from some of our traders. Wanted to know if everything was still intact. So everything is still intact. All right. I think the Dow was down. Let's see here. I don't think it's on here anymore. It's up right now. I think it was down a little over 400 points, but it's still intact. All right. Here is the monthly time frame on the Dow right here. All right. So we closed for the day. Let's see here. You guys should see my screen. We closed for the day at right at 33,947 for the day. So right here, all right, here's the all-time highs. Here's the all-time highs right here. So a bit of a pullback today, but still holding firm. All right. Again, we're still having that Christmas rally. So one day doesn't change anything. We are watching here. Let's see here. Watching here. There's a white candle right here on the Russell. The VIX pulled up a bit. So you guys remember on Friday we closed on the VIX around 19. So we finally got below 20. All right. And we went back up. So it's back up right now. All right. All right, Dean, you have a question? Go ahead, sir.
Hi, David. Yes. So in regards to the VIX,
okay,
in relation, is that in correlation to the Christmas rally? Because of the Christmas rally, the VIX is going lower. And the second question is, knowing this from a historical standpoint, how would one position themselves to prepare for after the Christmas rally?
Okay, so okay. All right. So yeah, so there is a correlation with let's see here. Let's with the Christmas rally. Now we always want to pay attention to the price action first. So if it confirms, right? If it confirms, right, the Christmas rally starts in usually starts in October. I'll bring out the dates here so you guys can see. We'll make it large here. Let's see here. Okay, so we'll make it really large here. All right, so if you guys see, can you guys see my chart here? You guys see that? You see October? You guys see October?
Yeah, I see.
All right.
Yeah.
Oh, Bill, we've got to get together on your Monster US 30 to do your training. You've got everything installed, right?
Yeah, that's up to date. I'm getting the data now.
Oh, okay, good. Okay, so here, look here, guys, look here. All right, so usually, right, when we talk about the Christmas rally, usually the markets will make a major move, and this is historical, right? So this happens almost every time, almost, not 100%. Hey, Arthur, welcome. Hey, Zaire, welcome. All right, so usually August, right? Usually May, sell in May and go away, right? That's the term, sell in May and go away. All right, so usually, right, the markets will start moving lower, right, in the summer months, right? So that's May here, that's a high. And if we just look here, made a high here, made a high here, but guess what? Eventually the market came down and made a low here. All right, so just like next year, right? Just remember this, right? Now we still use the price action. So Dean, we'll still use the price action to make sure, because it's not automatic, right? There will be times when the market will rally during the summer months. But historically, this is what happens. So if we look from here, May up here is May, all right? Or most of your crashes when the markets crash, that will happen during August, September, usually will make a bottom. All right. So it will make a low or bottom around October. All right. Around October. This is good to know. This is good information to know. So that when it happens, you know what's happening. If it doesn't happen, then we'll know from the price action. All right. So selling may and go away. What happens? All the hedge funds, all the big players in the markets, that's when they go on vacation. So school is out, folks are on vacation, right? Summer months. There isn't a lot of trading, right? So it's usually very, very light volume. All right. So if there's bad news in the markets, any negativity in the markets, because traders are not, the big traders are not in the market, that's going to push the market down. All right. So if you guys go back, if you look, if you just think of all the crashes, 9/11, right? Black Monday, all those crashes, right? All right. .com crash, right? They were all done during the summer months. All right. And what the hedge funds are looking to have happen, they want the markets to, I don't want to say that they want the markets to crash, but they do want the markets to correct, right? From May through October, and then October here, November, December. All right. Then that's your Christmas rally. So that's the fourth quarter rally. All right. So that's when all that buying will come in. So you look here, price made a low, and this is absolutely perfect, right? Made a low here in October, and then guess this is the buy-in, the Dow here. This is the Dow, and now it's moving higher. That's your Christmas rally. All right. That's your Christmas rally. So we know that if we look back historically, right, about 70% of the time, sometimes as high as 80% of the time, this will happen, but we still have to follow the price action just to make sure. Okay. Now, when does it end? That was your second question, right? Does this answer your first question?
Yes,
Dean?
yes, it does. Yes,
does.
thank you.
Okay. Now, your second question was when does it end? And then how do we use the VIX, right? So the VIX measures, the VIX is separate from the Christmas rally, okay? But it will support it. So the VIX is VIX volatility index. So unlike the other markets, the futures market, all right, Forex market, all right, unlike those markets where we need volatility, right, in equities, it's different. All right. We do not like equities. Traders do not like volatility in the equity markets, in the stock market. Okay. So I want to show you guys something here. And this is pretty cool. This is pretty cool here.
David, the stock market tanked today, right?
It didn't tank. It went down. Yeah, it was down 400 points on the Dow, but it's not major. If it
You think it's
continues,
gonna pop up?
go ahead.
You think it's gonna gap up tomorrow pre-market?
I don't know. If I knew that, I would be a billionaire, right? But yeah, we don't know. It could. Usually, what happens is this. We'll get down. The main thing is we're still in a markup phase. Okay, so if we look here, right? This is the Dow. We're still holding nicely. If we get a red candle, Arthur, then or sell signal here, then that's a concern. Okay, but so far it's holding. All right, so far it's holding. I want to show you guys this though, because didn't mention the VIX, and I know some of you guys know about this, but it's good to as a refresher. All right, as a refresher. Okay, we're gonna bring in some dates here. Where am I? Here. Okay, let's bring in some dates here. All right, so we've got some dates here, and we are going to bring in the time, the price. Okay. Okay, so let's take a look here. You guys see here. Let's do a side by side. And then this is how we want to use the VIX.
Yeah.
All right. Okay. Okay, so we'll go right here. So this is the VIX to your left. And then this is the Dow on the right. All right. All right. And follow me for a second. This will make sense. All right. So notice here, we talked about the Dow, right? Where the Dow and when you can notice this makes a difference in your trading. Okay. Okay, so we talked about, right, the selling, right? Selling that happens, right? Right, buying in on the low. This is when they buy in on the low. Sometimes it's end of September, middle of October, right? Sometimes it'll go into November, right? When the buyers come in. This time it happened perfect, right? So started in first couple of weeks in October. Okay. Now look here. Here is October here on the VIX.
Yeah.
Okay, so when the VIX made a high, look here, when the VIX made a high at 34. Now, let me explain the VIX. And this is important. All right. So the VIX is a VIX volatility index. VIX. VIX volatility index. Again, the equity markets, the stock market hates volatility, right? Right? Big investors, big traders, they hate volatility. They like smooth price action, right? Right? When they trade stocks. So we have to watch this VIX closely because if the VIX is high, that means we have high volatility, right? So 34 is high. Anything above 20 is high, right? So here, 34 is high. 32 is high. And if you notice, as the VIX is high here, guess what? Right here. Look here, right? When the VIX is high, guess what's happening to the market? The market is crashing. So October, the Dow was low. The Dow made a low, but the VIX made a what?
High.
It made a high, right? And as the VIX came down, look here, the VIX is coming down, right? Right, it's moving from 34 to 32 to 30. Guess what? As it's coming lower, guess what? The Dow is moving higher. Almost identical, almost the reversal, right? You guys see that? So as the VIX is coming down, look here, right? The VIX made a high, green candles. Why it's making a high, green candles? Right? We can call this the distribution phase. Guess what? The Dow, same time frame, same time, October here. So if we trade in equities, right? If we want to trade stocks, equities, and we're not aware of this, that's not good. That's not good. All
Hi,
right.
David.
Here,
So
Ranjit.
like, so this Dow and S&P, they are the co- combined of, they are the ETF, right? But they consist of ETF. But what is this VIX consist of?
It's
Or
just the
they are
VIX.
just
It's
or
just
they
the
just
it's just volatility. It just measures volatility.
what is the what is the formula for, like, how did
It's
they formulate the VIX?
it doesn't include any a range of stocks or ETF. It just measures volatility, market volatility for equities.
So
Now
is
you
that
can
like how it
actually,
ranges up and down?
what's that?
Is that like the range, volatility range, if it's going, like, if it consistently keeps going up and down in a range? Is that,
Yeah, but it can break, so it can break out of that range also. But and I'll show you guys. Some information on the VIX where you will trust it. Okay, it's important. The VIX is important. Okay.
does it dictate where the direction will go, or is it just to let you know the volatility?
Yes, so it is, yes, so it's directional. It is directional. Okay, so write this down. If the VIX is below 20, ideally below 20 in the teens, so 20, 17, 15, 13, right? 12, that's very, very bullish for the markets. Okay, that's extremely bullish for the markets. The lower the number here, the lower the VIX, right? And I know it looks, it's going through the markdown phase, red candles. You would think that that's bad, right? That's bad,
Yeah.
but it's the opposite. It's very, very good for stocks. All right. If the VIX is going up, moving up, bad for stocks. Bad for stocks. That's more volatility. Okay. So we want that VIX to go down and ideally below 20. Below 20. The lower the number, right? And the longer it stays below 20, right? The better it is for traders and the markets and the equity markets.
But when it's below 20, it's bad for Forex, right?
Yes.
Yeah.
And Bill, why would you think it's bad for Forex?
Because Forex is that works on the volatility, the movement of the market, right? We do better in Forex when there's movement, when the VIX is higher.
Or maybe all the traders are moving to the equity market.
Yes, and that's part of it. Yes, that's the reason. That's the main reason why, right? So if the equity market, if the VIX is low, and it's in the low teens, guess what? Markets are moving higher. Guess what? Traders are going to go into the Dow, into the equity markets, get out of Forex. So whenever we start to see, and if you guys noticed, right? Forex, we were trending a bit, right? We had some volatility, right? Right. All during here, we had some volatility. And guess what? It's starting to slow, right? So as the equity market picks up, right? The Forex market will slow down a bit. All right. I want to show you guys something here.
So David,
So
you're saying like when it goes below, VIX is below 20, then it started to, that means like the equity market will grow, right? So
Yeah, higher.
like equity market will go higher, like a bullish. So how low that VIX can go so that we can measure that, okay, the market has peaked and is going to turn.
Yeah, I'm going to show you guys here.
Also, David, does the VIX like guarantee it, or is it just a good indicator?
It's an indicator. Yeah, it's an indicator. But
So
it's more than an
sometimes even,
indicator. It's more than an indicator. Because I would say it's like an index, right? Because you can actually trade it. Traders trade they will trade volatility. All right. So we could trade volatility. I believe there's some ETFs I believe there's VIX. Yeah, we can trade it in Monster ETF futures. You can trade it in futures, so you can trade volatility. So if traders think, well, volatility, the market is getting ready to go lower, right? And they see it, they can get a buy signal in the VIX. We could trade the VIX. They could trade the VIX too. All right. So let's see there. They're trading instruments out there for the VIX. All right, so let me show you guys this here. So that's the monthly here. And this is pretty cool. This is really cool. That's why we always start off with the VIX. We look at the indexes and then the VIX together. All right, let's see here, time frame. Could you imagine trading and not having this information, right? Okay. So you guys remember, I'm going to bring this in here. So this is a monthly time frame here. 1 second here. Okay. So a monthly time frame, and this is the VIX. All right. And I'm going to put in a couple of lines here so you guys can see, because you want to get to the point where you trust in this information. All right. You trust in this. All right, here. Okay, so right here at the bottom, right here at the bottom, is the VIX is at 9, 2000, and up here, and let me know if you guys don't see this. Okay, right up here, let's say 80. So 9 is down here, 80 is up here. All right. Now I'm going to go back here. I'm going to start with, and some of you are young, you don't remember, probably don't remember this, but 2000, 2001, we're going to go back to the 2001 crash, right? Dean, you remember that, right? The
Yes,
dot-com crash.
.com crash, yeah.
Yeah,
I was
man.
part of it. I was in it.
Yeah, yeah. So if you guys look here, look at the VIX during 2001. 2001, 2002 was the dot-com crash. Look at the VIX, how high it was. It came all the way up to 50. 2001. So when that VIX moves up like this, right? That's signaling a crash. All right. And then this was after the crash, right? As the market started to move higher, the VIX came all the way down here in the low teens, very low teens. All right. So all this is bullish. All the VIX is coming down. Here's the crash. 2001, 2002 crash right here. Here is the VIX coming down. All of this is bullish. Here's the crash. Then here is the market making highs. And then what happened? The VIX 2007, right here, 2006, 2007, really 2007, the VIX started to move higher again. Look here, it's moving higher. 2007 went all the way, all right, past 80. Here's 80 right here. Here is the crash of 2008 right here. Look, see here, 2008. Here is the VIX. That's your crash. That's your crash, 2008. All right. Then after the crash, right, markets crashed here, and then came down, VIX came down, and now the market's moving higher again. All right, moving higher again. You guys see that? That makes sense?
Yes.
Yep.
All right. So when you go back in history and you do this, then when that VIX gets low, you can get excited about it, right? When that VIX gets high, we want to be careful, very, very careful. All right. All right. So let's see here. Here is 2000. Here is COVID. Here is COVID here. 2020 when COVID hit, right? COVID hit. Second. So 2020, right? So all before 2020. So 2000, 2012, right? 2012, 2013, right? All these here, the markets, you guys remember, right? Markets were very bullish, right? Until COVID hit right here, right? The markets were making all-time highs, right? All-time highs until COVID hit right here. That's your VIX, right? COVID hit, market crashed. Well, didn't, it came down quite a bit. I wouldn't call it a crash, corrected quite a bit. All right. And then, right, so that's COVID, and here we are right now. This is on a monthly time frame though. And so right now we're at 20. So it's been coming down. So the VIX has been coming down since then. All right. So look here. So this is COVID. This is 2008, 2008 here, and then here's COVID here. You see how high that VIX is? See how high it is compared to here? All right. And you see what's been happening here right now, the last 2 months, it's been coming down, right? And the market's been moving higher. All right. So here, if it can get back down to this area in here, that's very bullish. All right. If it starts to move higher again, that's not good. We're going to see the Dow, S&P, NASDAQ move lower. So we want the VIX to be down in these areas in here, down in these areas near support. I know it's the reverse, right? But that's what we want to see. So we want that VIX to come down if we're equity traders, if we're stock traders, and we want it to stay really below 20. That's your sweet spot right here. Below 20, right here is where we need it to stay. Right, 20 right here. So anywhere below 20, good for stocks, right? Anywhere below 20. You guys see that? All right.
Yeah. So,
all right. Very good.
So do you recommend VIX should go down below 20 to enter into equity market?
No. So we don't have to wait for the VIX, right? So we'll use and good questions. We will use, right? The VIX just gives us a warning or will give us confidence, right? But we still want to stay with our signals and the price action on the indexes. So yeah, so just using the VIX by itself is not enough. Okay, so we still want to use, that's why we have it here, right? So we still want to go by our price action, okay, on the Dow, the S&P, and the NASDAQ. Okay, we want to wait for those buy signals, right? We want to wait to get into the markup phase, all right? Break off support resistance and so forth, okay? All right, so we'll still trade, Ranjit, we'll still trade it just helps us to know what type of environment that we're in. All right, the environment that we're in. Okay. All right. Any other questions? Any other questions? Any other questions?
Is the VIX normally delayed? I have one on my brokerage, but it's always like 15 to half an hour late.
Was that the VIX?
Yeah.
Okay, so the VIX, you wouldn't use it on a small time frame. You want to use it on a daily, all right, a daily, weekly time frame. Okay, so not
So it's a lagging indicator or index.
yes, yes, it lags a bit. Yes, yes. So we use it to see the big picture. Okay, yeah, you wouldn't want to use it to time any entries. All right. The VIX is good for turning points too, to find turning points in the markets. Okay, so if you notice that the VIX, like you saw at 80, 80 is really, really high. All right, so if it hits 80, if it gets high as 80, 70, 60, 70, 80, then price might be getting exhausted. The sellers might be really getting exhausted. All right. And as that VIX comes down, as the VIX comes down, then that will help the markets, turn. Okay, just like you guys saw, we looked at October, right? That Christmas rally that Dean mentioned, right? Where in October, the VIX made a high, right? The VIX made a high, but in October on the Dow made a low, right? And the Dow started to move higher and the VIX started to come down. Okay, so you could use it as turning points. This is where the turns in the market is where we usually get trapped. the, the market's making new highs, all-time highs, and we keep buying, right? So the VIX can let us know that, hey, we might be be heading for a turn in direction. Okay. It's not something that you guys need to pay close. I have to pay close attention to it because we follow all the markets. Okay. But as a trader, as an individual trader, it's good to learn about it. It's good to follow it, but it's not totally necessary, right? If you just follow your 4 market phases, you do have to follow the indexes, right? The indexes, your sectors, you should be fine. But if you really want to do things the right way, the VIX it's definitely one to keep an eye on. All right. Any other questions on anything else? We've spent some time on this.
Hey David,
Hey Ranjan.
so I have question on that previous discussion. What you were explaining it about Christmas rally and the summer vacation, right? So is that very typical every year? Like October is kind of a low point, and March and May is the high point, and every year it goes from May to October low, then October to May high. Is that cyclical order every year like that?
Yeah, it's fairly consistent. Okay. So much so that and I've mentioned this before, there is, hold on one second. All right. There is a and if you guys want to do further, get further information, I'm going to share my screen here. I don't know if they bring it out anymore. But right here, all right, so you guys should see my screen here. It's called the Trader's Almanac. So think of like a farmer's almanac. This is called Stock Trader's Almanac. All right. And I don't know if it's published. I used to get these every year. But now I track everything, right? I use the system to track everything. So I don't get the book anymore. There was one for commodities also. All right, but it's called the Stock Traders Almanac, and it's basically historical trends. So if you look at historical right here, historical price action on the stock market. Okay, and it's dated. It goes back since 1968, right here, right, and looks for these cycles and looks for trends. All right, and this is perhaps one of the most popular cycles in the Traders Almanac, in the Stock Traders Almanac. Okay, that Christmas rally, selling in May and going away. All right, and the idea is, so Ranjit and anyone here, if you guys want to do right here, now it's not current. I don't know if there's a current one. But you guys can, you can do, it's fine. If you wanted to see, Joe, you might not get, even if it's not current, you can get it. It's only $5.49. And you can go through and see the data, right? And see the data. And it's pretty accurate. Now you still use your systems, you still, still want to break of resistance, follow the 4 market phases. But it's good. This is all good information to have. It just makes you a better trader, right? Things to watch out for. All right. So that Christmas rally. Now, why does it show up in the Stock Traders Almanac? Right? The Stock Traders Almanac isn't creating this. The price action isn't creating this. It's the traders, right? If traders are not trading during the summer months, if they're on vacation, right, they're not trading, what do you think will happen to the market, right? And then if we have bad news in the market, bad news in the summer months, negative news, and traders are not there to prop the market up, to trade and prop the market up, guess what? It's going to go down. But there's something else in play, which is the fourth quarter. So, most of you guys have been around, right? Fourth quarter is really big. It's big for most businesses, most companies. That's where they make the bulk of their money, right? In the fourth quarter, especially retailers, right? Retailers make the bulk of their money in the fourth quarter. They make their year in the fourth quarter. As traders, a lot of us as traders will make our year in the fourth quarter, right? That's when you have a lot of spending coming into the market. All right. So so that's why it's the Christmas rally. The Christmas rally doesn't happen because it sounds good. It's because of the spending, right? All of that spending that's coming in the fourth quarter. So let's see. Now, I want you guys to think of it like this. So I want you guys to think of it like this. Think of yourselves as you've got millions of dollars, right? Millions of dollars, and you're looking to get into the market, and you know about this Christmas rally, right? And you know that the markets will, the majority of the time, right? You know about the Traders Almanac. You know about the historical trends that happen, right? And now you can kind of plan. You can sit back and wait for the markets to correct, wait for the markets to crash, right? And be on the sideline and wait, right? Buy low, sell high, right? All right. So, Second here. I'm going to
So
bring
what
it.
do you then recommend, David? So like always enter into equity market during October and the rest of the year do something else? That's what the bottom line.
No, no, no. There's still trading opportunities. Okay, there's still trading opportunities. All right. Now, big investors, yes, they'll do that, right? But we're not big investors, right? So we can still trade because we have these tools here. Here is the Christmas rally, right? But all during the year, we still have to trade, right? So here's the Christmas rally. Here's the low in October. That's the Christmas rally. All right. We still trade the price. So don't get glued to the Christmas rally here, right? Here is July. Here is July. Here was a low here in July. It still made a high. We could have traded this, right? We could have shorted this. We could have gotten puts, shorted this. Okay. Right. So there's still trading opportunities, but just, yeah. This is a big one. Fourth quarter Christmas rally is a big one when it happens because it happens a lot. It happens a lot. Okay. But this is not the Christmas rally by itself, the VIX by itself. Okay. You can't look at just one thing, right? We look at several things. All right. So not just one thing, we look at several things. All right. And let's say, for instance, it's October and the price, right, stays in the markdown phase. And it's happened sometimes where in all through October, November, December, it doesn't happen. But when it happens, you can say, oh, okay, we're having a Christmas rally. All right. All right. We're having a fourth quarter Christmas rally. All right. All right. Make sense? I don't want to confuse you guys too much.
Thank you, David.
Yeah, you're welcome.
David, when are we gonna have some question time?
This is it. This was it.
Oh. Oh,
yeah,
thanks for
this
that.
was it.
Mm.
Do you have another any more questions? Right?
Yeah, I do. You know, normally, let's say we take a risk and we hold on overnight, and let's say it gaps up in the morning. It's best to sell like during that morning time, right? Because it's most likely like normally if it goes up, then during the regular trading hour, it's gonna go down because it can't keep going up, right? It's gonna bounce up and down. So, would you say
Well,
that's
it depends on the time frame, right? So we've been talking about time frames. If you're trading on a time frame that is below 30 minutes, anything that is below 30 minutes, 15 minutes, 5 minutes, right? It's intraday. So you normally will not hold overnight, right? You're trading intraday. Okay. If it's 60 minutes, an hour time frame, a 4-hour time frame, or a daily, yeah. If you're going to hold it overnight, if it gaps down, it gaps down. Or if it gap up, it gaps up. All right. Right. You just follow the price action. Right. If it gaps, it can gap down. It can gap down and still be in the markup phase. And you'll see where the price continue to move higher. Let me see if I can find an example. Does that make sense? Price can gap down. Just because the price gaps down doesn't mean we should exit the trade. Okay. So it can gap up and gap down, right? It depends on the time frame. Here is where it gapped up, right? It gapped up here. All right. Let me see if we have one where it gapped down. Oh. All right. Okay, here is one that gapped. All right. Here is one that gapped up here. Here is one gapped up here. All right. Gapped up. So it's still, it can gap up and down, right? Until it can gap, as long as it stays within, your markup phase. All right. It can gap up. It can gap up within the markdown phase, but as long as it stays within the phase. Okay.
Okay.
All right. Any other questions? Any symbols? You guys want to take a look at any symbols? We're almost done.
Dave, just one quick question. So when you're talking about the gap up and gap down, are you talking of those areas where there's no candles?
Yes, yes.
And
Yes.
what's the significance of that? I mean, is that a good thing or a bad thing?
It's
What is that?
usually when the market opens. Okay. So when the market opens, like let's say in the morning, the market opens higher. So you have traders that are getting into positions after hours. All right. So here, for example, it's only a bad thing, right? I say if it gets you out of the trade. And sometimes it will do that, right? Where it will gap down. So let's say price is moving higher like this, right? And it closed the equity markets, right? It closed on Friday here, and then it gaps down. Let's say it gaps down here. It gaps down here. So no candle here, and it opens here on Monday. All right. And it comes in right at your support, at your resistance, which is now support, and it gaps down in here. It will give you a sell signal to get out here. Yeah. Okay. So now markets closed on Friday. You held the trade, right? You held the markets closed on Friday here, right? No, here. You held the trade right here, gap down, and now you've got to get out. It is what it is. All right. We can't control that. Okay. I always tell traders, right? I think you guys, if you remember Tylak saying, right, on his big trade, right? And he'd ask, hey, David, should I what if it gaps down? I said, well, it can gap up also, right? It can certainly gap up, like here too. It can gap up. So it's just what it is. It's going to gap up, gap down. It's just, we can't control that, right? If we stay in the markup phase, stay within our trade, we're fine. All right. Zaya, you had a question? Zaire?
Oh yeah, I was just looking at the banks. I just wonder what your thoughts are.
On the banks?
Yeah, like like WFC. That's one of the ones.
Okay. WFC?
Yeah.
Okay. Let me take a quick look at financials. Let's see here.
So David, that
Financials.
gap down and gap up generally happens over the weekend or over the night? Weekday
Over
or
the
Friday?
night, yeah. Yeah. It normally happens. It will happen with Forex, like on Sundays, right? When the market opens on Sundays. But it happens more in the equity markets. We'll find it more in the equity markets.
And it can happen any day, right?
Yes. Okay, so financials. Zaire, you're sitting right here. This is a bit of a concern right here, right? So you've got resistance here, right? And it's failing to break resistance right here. All right, so that's a concern. Everything was down today. All the sectors were down today. So I would watch it. Here is your resistance right here. This is the financial sector. So the banks are in here. All right. So I will watch it. If it breaks this level here, we might get, you know, a white candle, a red candle. Okay. So this is a concern right here. We need it to hold, right? So hopefully, right? Hopefully it will hold tomorrow, right? This is where sellers are, right? So if it breaks this support right here, all right. And if this happens, then it will be a short-lived Christmas rally. All right. So anything can happen, guys. We can't control these markets. So let's take a look at, we just have to go with the flow, go with the flow. So WFC.
Oh, how about this one, Neo? What do you think? Do you think it still has some?
1 second, Arthur. Let me. Okay. All right, Zaire, what are you looking to do here?
Well, I have a small, I mean, I'm taking a chance and put a small put on it. So I don't know if I'm just going with the momentum of the market or
Do you
in a
have a
put,
put
yeah.
position yet, or are you considering a
Yeah,
put?
yeah, I have one.
You have a put? Okay.
Maybe it's a little bit early. I don't know.
Well, no, it looks good. This is on the daily time frame. It failed. Look here. It failed, right? It failed to hold above resistance. All right. So here is resistance here, here, and then here. So the buy signal came in, right? Failed, right? Give a sell signal to get out, right? And that's a nice quick exit here. And it's right here. Okay. So that's a good trade here. Yeah, a little early, but you got in today or yesterday?
I got in today.
Today.
I wish I hadn't got in yesterday.
No, that's a good trade here. This is an area for you to keep in mind. And guys, this market could roll over. You know, there's no guarantee that it will keep going higher. Okay, Zaire. All right. So you've got a trend line here. Okay, so it might stop here, right? It might stop here. Okay. Let me see something. You see what I'm looking at, Zaire? You see this upward trend line here? So it might
Yeah.
stop. It might hold here. I want to see something. That trend line is a concern. It really is a concern there. You see, it's really a concern there. You don't have clear support. Okay, you don't have clear support to break. All right. So but you do have an upward trend line here. You don't have clear support to break. So you might hold here. This is on the weekly time frame, Zaire. Okay. So
David, a quick question.
mhm.
So please forgive me. I'm trying to understand. You said there's no clear support to break, or is it resistance to break? How do I?
Okay, I'll show you. Okay. Zaire, do you see that, Zaire?
Yeah, David, I saw.
Yeah, yeah. Okay, so here,
Mhm.
okay, so we have a very defined trend here, but we don't have clear support, meaning we have clear resistance here, right? We have pretty
Okay.
good resistance here.
Gotcha.
Yeah,
Yeah.
we don't have clear support. No, this on the weekly time frame. So we don't have it. I mean, we could move it here, but then that's still not really good support. You see,
Yes.
we don't have a
Okay.
flow, right?
Yeah.
And
I
and then
see.
even with here, we don't really have a, the closest we might get. So we don't have a defined flow. Here is a low here.
Wow. Okay.
But what we do have is, and that's always a concern when we don't have a defined support, right?
Mm,
Because we need an area where sellers will come in heavy on a break
yeah.
of support. And we don't have that. We have a failed of resistance, right? Failed of resistance, which is support, but we don't see we don't have any. See right here, it's not defined. What we do have that's defined, and traders will be watching these areas, right? So what we do have is a very defined trend line here.
Yeah.
Okay. So what could happen is, so if Zaire shorts this, right, with his puts, here is where buyers came in. Here is where buyers came in on this trend line right here. So, right, they can come in right here and now push it up. And we remember we're still in the markup phase.
Mm,
Yeah, we're still in the markup phase, right? The market isn't bearish. The market is still very bullish. So his puts can now, if it hits this trend line here and now starts to move higher and now retest this resistance and does this, guess what? He's in trouble with his puts.
got it. Got it.
Okay, and that can happen quickly. Now this is the weekly time frame, but even on the daily, that's why we're looking to see the support where sellers, right, could or will come in, and we don't have that, so that's a bit risky. So even on a daily time frame, now here he's got a bit more support here. Right. So right here, he's got a little bit of support here.
Mm.
Okay. So Zaire, I mean, yes, you could get a decent trade out of it. Okay. I would pay close attention to it, see how it reacts here. Okay. And then you might, based on how the market does, if we get another down day, right? If we get another down day tomorrow and through the week, yeah, you could get it down to 40 or so. Okay. It would have to break this support here. All right. But this is a nice entry, right? This is a decent entry here on a nice big red candle. That's nice selling coming in. Okay. Yeah. You might want to put it on a 240. So your trading window might want to do a 240.
Is there a sell signal on the 240?
Let's find out. Yeah, looks like we have one. So let's bring it in here. So Zaire, put it on the 240. Uh, Okay, yeah. So right here, sell short came in right on that break of support. So perfect. Right here. So this candle right here and right here. Here is your sell short signal right on this support line right here. Right here. So yeah, you got into what price did you get in at, Zaire? What price? What was the price on the line when you got in?
Let me look at it. Give me a minute.
Okay. Hey Bill, you might want to take a look at this too.
Yeah, he showed me that earlier this afternoon. I think it's a good trade.
Yeah. And this is the banks. So the banks are not if financials. Zaire, this might be a good trade here. If you got in today,
I think I got in at 43.
43?
Yeah.
Yeah, here's 43 here. Okay.
Oh, wait.
Yeah, that can be 43.
Oh, 40, 44.
44. Okay. So you should be in profit. Yeah, you could get a move. You could get a move down. Look here. Look here. Yeah, you could get a move down. If you're lucky, you could get it down to 40. All right. You could get it down to 40. That might take a bit though. But yeah, not bad. But I would say the 240, and perhaps watch it, manage it on the 1 hour. Okay, on the 1 hour. What will help you is the market. So if the markets sell off a bit this week, that will help, right? That will help. And keep an eye on financials. Where is it? Right here. Financials right here. You see here? So if financials comes down and it's close, it's looking to test support right here, get a sell signal like before, you could do really well. You could do really, really well. Okay, so you got pretty good here. All right, this is where it failed before. Buy signal failed, right? Buy signal almost identical. Look at this, guys. Almost identical place. Buy signal here failed, right? This financials. So if it fails again, I would say keep an eye on this. If it fails again, guess what? You're in early, right? And that if that comes down back down here to support, right? You're in pretty good. All right. Those bank stocks will follow financials. All right. It was down. Financials was down. Let's see here. Financials. 2.39% today. Okay. All right. So yeah, good trade. Good trade. But keep 240 and perhaps even the hourly time frame. All right. All right.
David, can you check the Neo, please?
Any other questions, guys, before I leave? Any other questions? Hartley, you had a question?
Yeah, can you do that? Can you check that for Neo and XPEV?
Okay. XP, let's see here.
Yeah, XPEV.
Okay. On what time frame?
Um, how about the daily, 4 hour and
Okay.
hourly?
Okay, let's do. Okay, XPEV as in Victor?
Yeah.
Okay. All right. What are you looking to do here?
I'll just kind of just want a general idea of what direction you think it's looking to go.
Okay. All right. Okay. Good job. Good job. Good job. You're doing a much better job finding every time you're doing better finding these really nice markdown phase. Okay, so good job. All right. So if you look here, really good markdown phase, right? Sellers, right? Sellers are coming in, markdown phase. Buyers try to come in. Did not get a buy signal. All right. And look at this really nice markdown phase. Right. You got good support here. Very good support. Good job, Otto. Good job. Really good resistance here. Green candles, buyers are coming in. All right. So we just need to wait for a buy signal. I know you don't have the system to give you a buy signal, but what you want to do, it's going to give you a buy signal anytime. Okay. Anytime. Okay. So good job. Good job. It should give you a buy signal anytime. Your protection is here. So if you enter it and it breaks through, I would say this is 952. Let's say $10, right? So right here it's at 11 and change. All right. So your support, previous resistance becomes support. So 1050, let's say $10. So you might want to bring it, put your support, your stop loss below here. All right. And then you have one stop loss here, right? Below resistance, which becomes support. And then your next exit would be below your support over here. Okay, so worst case scenario here is your exit, and then you have a closer exit here. Okay, but good trade. You don't have any real resistance. All right, you have some here, but I would say your real resistance is up in this area here. If the market holds, if the market turns over, right, then guess what? This will turn over like this. Okay.
Thanks, David.
Very good. Very good. Very good. All right. Any other questions, guys? Good questions this evening. Good questions. Right. Good questions. That VIX, right? That VIX. If you guys want, hey, that Trader's Almanac, I would get it. $5, right? Even if it's old, it goes back 60 something years. So even if there's not a current, I stopped getting those years ago. But
yeah, I was just seeing that they have 2022 one also.
They have a 2022. Yeah. Yeah. It's not you can't use it to time. It's not good to time. You can't use it, right? Because that's dated information. Right? We always want to go to the chart. We always want to follow support and resistance, but it's really good information to look for, especially as you guys grow as traders, right? As you grow as traders, it's good to have it so that when these market cycles happen, you'll be aware. All right, you'll be aware. So it's just more good information. No, it's not just random information, right? So you guys know me. If I give you guys some information, it's good information that you can use. And that Trader's Almanac is a good one that you guys can use, right? Not for timing, though, not for timing your entries and exits, but just to have an idea of how we can use historical data in our favor. All right. All right, guys, take care. Have a great evening. Thanks for coming. Good class. Good questions, guys. Good questions. Okay. Zaire, yeah, hold on to that trade. Just, keep a close eye. If the Dow is up 800 points tomorrow and this market is crazy, we've seen that. We've seen crazy movements in these markets. So just keep a close eye on those puts. Right. All right, guys, take care. And I'll see you guys tomorrow for our beginners class tomorrow. Right. So take care, guys. See you tomorrow. Bye-bye.
Thank you.
Thanks, David.
Take care,
Night.
everyone.
Bye, guys.
Night, everyone. Bye.